Just wanted to thank everybody for supporting this channel. As you can see, today I'm at the park. We're just out shooting some basketball, trying to get some exercise. And before we get into today's financial and economic news, I just want to repeat what I saw in comments. And this is something I've known for a long time, but recently I had some lower back pain, lower back injury. I was actually pulling a root out of the dirt, out of the ground, because I was afraid it was going to grow under my house. And it kind of hurt my back a little bit. So actually I couldn't run or jump or anything for a while. So after like 3 months, I'm finally back to sort of normalcy. It's still a little pain. But what I wanted to put out there was health is wealth, right? So there's been times in my life where I've been so hurt or injured for various things or sick that I would have given up all savings or anything like that just to feel normal again and to have health. So health is wealth. And thanks for someone that put that down in comments. It's a common saying, but health is wealth. If you have your health, even if you don't have any money, if you're barely getting by, health is wealth. Stay healthy, try to get exercise, and be careful bending over and pulling roots out of the ground. Bend at the knees, right? Don't bend with your back, and try to stay healthy, everybody. Just wanted to say that. Stay tuned for some news. Thanks for being here. When we think of war, we may picture or envision a scene like this one right here on your screen. But one investor in economic analysis is predicting a different type of war, and he's predicting a major market correction when the Fed finally goes to war against inflation. So yes, a different type of war, but it could have major impacts, and if you're over leveraged and too dependent on the markets for wealth, then you may find yourself in a lot of pain if and when the Fed does go to war against inflation. And this was an interview over at Kitco. Quote, once the Fed goes to war against inflation, stocks will get annihilated and crash 50%. Will the Fed go to war against inflation at some point? That's possible. And a likely scenario is the Fed comes out and says, oh my goodness, inflation is terrible, prices are rising too much. And what they'll likely say is, well, it was caused by this or that, no one saw this coming, when in reality, they did see it coming. But if you listen to the Fed currently, they have to act like it's transitory. They have to act like the current situation and what we've been seeing unfold here over the past year and a half, they have to act like those things were the entire reason for rising prices, right? They don't want to blame themselves, of course. And when I talk about the reason for rising prices, I'm talking about the labor shortages, the supply chain disruptions, the shipping disruptions, and just the global disruptions that we've seen in shipping and manufacturing because of the great sickness. So they'll likely come out and say, well, we have to fight inflation now, we have to raise rates, no one saw this coming. Now we have to reverse course and raise rates. Will they do that? Well, nobody knows. But it would be a good way for the money printers to get around the blame. But in this case, I'm reporting on someone that I disagree with. I don't think the Fed is going to do that. Michael Gentile, a very seasoned investor, saying that the markets are going to get annihilated when the Fed reverses course and fights inflation. Right, so he's saying that the Fed is going to raise rates to fight inflation. I don't think the Fed will do that because I think that there's too many eyes on the money printers right now, and it would be too obvious. It would be too obvious. They would cause the crash, and everyone would know it, or at least people that listen to alternative news would know it. So I disagree with them here. We'll see who's right. I mean, so far over the years, there have been many calls for market crashes and corrections. Of course, we saw the stock market crash in April 2020, only to recover again to new all-time highs, just as we predicted. So we'll see who's right on this one. Again, I don't think the Fed's going to do that, and we'll have to see how it unfolds. I think the markets are going to continue to go up unless we see some other situation jump out of the woods that causes the credit markets to freeze, which could then cause a massive panic and deflation. Other than that, or some other thing that happens that pulls the plug on the money printing, and of course raising rates would be something else too, but I don't think that's going to happen. We'll have to keep an eye on it, but that's just my call on what he thinks. What do you think about it? Will the Fed start raising rates to fight inflation at some point, and will that bring the markets down? Please let me know down in the comments what you think on that. But it's a pretty interesting take, pretty interesting point that he makes there nonetheless. Let's transition now to this next item. Now, here's an article. This is out of Business Insider, and this really made me think. And this article asks the question, the unemployed may never come back. Here's what it means for the economy, or it floats out the idea that the unemployed may never come back. So for that to happen, you'd have to see some permanent benefits handed out so people can just no longer even worry about working. We're talking about UBI and several other things that we've talked about, maybe never ending eviction moratoriums, right? Maybe more free housing for more people, and therefore you're going to have people just not having to go back to work and not even being incentivized to go back to work. But one of the things that's pointed out in this article is that even with the big drop off in the labor force, and if it's a permanent drop off, companies are just going to work their employees harder and get more production out of the employees that are working there. So you're likely going to see more jobs that are just going to have really more tough schedules and tougher work, more workload, bigger workload, probably more calls for overtime. You know, who knows where this could lead, but it could be a case where companies and employers just try to get more work out of people, and yes, they may raise wages a bit, but will it be enough to make it fair compared to how much more work that the average employee is going to have to do to keep productivity rising with this continued labor shortage, right? So pretty interesting article in my opinion. What do you think about that? Is it possible that the unemployed may never come back? Now, of course, at the same time, they're going to float out there the unemployment number, which is not real. I believe it's in the 5% range right now, but the real number is actually over 25%. It's a bit over 25%. If you look at the real number, you can go to Shadow Stats and look at that. So the number that's put out there to the public on the business news channels and the like, you know, that's 1/5 of the real number. So they're putting out about 5%. It's really over 25%. It's pretty crazy, but it's true. All right, more Fed taper talk. The Fed to unveil bond buying taper plan next month. Jobless rate to fall slowly. Now, the key word here is plan. And just because they unveil a plan doesn't mean they're going to be able to execute it, right? Because if they execute it, again, there's going to be repercussions in the market. The central bank and the Fed being so involved in the markets and in the banking system, it's kind of like someone on drugs, right? Once you get on the drugs, it's very difficult to get off. And I've heard a couple people use that analogy, but it's one of the best ones I can think of. Maybe you can let me know down below if you have a better analogy. But once you have this level of support for the markets, for housing, for the stock market, all these benefits and assistance programs, moratoriums, other types of payout programs, it's very, very difficult for the people that depend on those programs and the markets that depend on those programs to not have big problems once that support is pulled away. So no, I don't think the Fed, they may unveil a plan, but I don't think they're going to be able to carry it out because they will then be seen as the cause of the crash. So what do I expect? I try to say this every few reports here just so people kind of get a gauge on what I'm seeing and what I'm doing. I am preparing for more inflation. What's going to stop it? I mean, you let me know if you know any secrets or inside knowledge. But more inflation, more rising prices. I don't give investment advice, but you might want to hedge yourself. We're now 50 years after Nixon ended the gold standard. Dollar's dominance faces threat, and they're talking about alternative currencies. But even as I'm recording this today here, the dollar is still the most widely used currency for transactions globally. Now, could it be unseated? Well, if the inflation continues and you start seeing a big drop off in the confidence in the dollar, yes, it could be unseated, absolutely. And that's why I try to say here as often as possible, you know, hedge yourself. My favorite is silver. I have a link down below. I don't give investment advice, but that's what I continue to stack with. And I've got some investments right now that are going up a bit. I'm going to sell some of those off here if they keep going up and get more silver. Link down below. You help out the channel when you use that link. But everyone, just for being here, you help out the channel. Thanks everybody for tuning in today. Stay healthy, and if you're not healthy, try to get healthy. Like I said at the beginning of the video, health is wealth. So stay healthy, get healthy. Be safe, everybody. Keep stacking, stay prepared. Bye for now. Peace.